Welcome to the LeapSheep Startup Builder Live Q&A. This is the place for any startup founder to ask burning questions that are keeping you up at night and learn from our guest founders and startup support experts. And of course, LeapSheep's own startup building experts who have worked with hundreds of founders and their teams. Welcome, I'm your host today, Kirk Drage, and I'm the CEO and co-founder at LeapSheep. At LeapSheep, we're on a mission to flip the 95% failure rate by making expert, professionalized startup building guidance accessible and affordable for all founders. Welcome to founders who've joined in. It's great to have you here. This show is all about supporting you to get from idea to build the business model hypothesis that can get to product market fit and then validate that it actually can before scaling up safely and avoiding that 95% failure rate. Thank you to the founders that have sent questions in. If you've got questions during the show, please drop them into the LinkedIn or YouTube comments and we'll pick them up as a priority as we go through. Today, I'm absolutely delighted to have Andrew Flick with me here. Andrew is one of the principals of Innercode, a leading boutique firm helping software and technology companies in Australia to access the R&D Tax Incentive program. Andrew has over 15 years experience helping companies to apply these incentives, as well as dealing with audits and review. Andrew, it's fabulous to have you on the show.
Yeah, thanks, Kirk, for having me.
Let's jump straight in. We've been having an interesting conversation before the show, so I'm sort of keen to sort of jump into some of your experience. You've been in this space basically your whole career, right? Can you talk
Yeah,
through a
pretty
little bit how
much.
you sort of fell into this very specific part of innovation and accounting and tax, this R&D incentive space?
Yeah, well, originally I came from an accounting background and well, eventually became a CPA. Um, but yeah, to do what I do, you actually need to have a tax license. So coming from an accounting background is very helpful for that. Um, and yeah, I started out basically in an R&D tax firm. I just pretty much joined almost out of university, and yeah, and thankfully I did because I sort of always had a really strong interest in software development and startups in general. Even before I joined one, I
You
used to
haven't
do
been
like
tempted to go and start your own software company?
I used to do like those startup boot camps. Like before I was
Yeah,
doing like this, used to go to those like boot camps where you would actually start. I obviously what is not as technical as some of the people there, but yeah, I was actually I probably might have done that in another life if I'd sort of become a regular accountant and got bored of that. But sort of I guess doing what I do actually sort of it's good. It sort of has combines two different disciplines there of technology and I guess regular accounting too. So
yeah,
um yeah, so I basically started out in a firm, and I was working in that for a number of years, and basically over that time I actually sort of I attracted more and more of the software companies in terms of my client base, and I noticed, I guess, that they were sort of being, underserved in the market. So basically, I came up with the idea of, I guess, developing our own firm that just specializes in software technology companies. About 90% of our clients are software or software adjacent, but we do a bit of other technologies as well. So.
yeah,
Um,
awesome. So a bit of an entrepreneur as well, spotting market opportunity and stepping into it.
Yeah, well, I guess it was natural and playing to my strengths and also just seeing that there's a lot of software companies were sort of not being, I guess, served as well as they could have been.
Yeah, cool. So just shout out. I see we've got Truidos. I hope I'm saying that correctly. That's joined us from the United States. I guess we should say at this point, this program's the R&D tax incentives is an Australian government program, isn't it? So if you're listening from anywhere else around the world, this content may not be as relevant to you. You might want to look at your local government to see what sort of innovation schemes that they have. But this scheme is particularly for the Australian government. And I think, Andrew,
Yeah,
this scheme's been
although
in place for decades, right? In some form or another.
yeah, that's right, for about 40 years. And there are other R&D tax programs around the world, so it's actually not that uncommon because it's one of the few ways that the governments can actually support their local industries without sort of falling afoul of the WTO sort of rules in
Right.
terms of government assistance. So you'll actually find that there's in like a lot of European countries, even America has one, although it's not as good as the one here. They have R&D tax programs. So
Yeah.
if you're out there in the world, then see what your local government is offering. But yeah, it's very country by country thing. So um, our current R&D scheme has been around for about 13 years or so. But there were previous generations of R&D schemes before that, going back to something like the 1980s, which is quite a long
Awesome.
time ago.
I see Theodorus says he's actually from Melbourne. He thought we were from the States, so it's good to have you on the show, Theodorus. Um, Andrew, we were talking before about the structure of the program is quite tricky, isn't it? Because this is a program that's designed for all companies, all technologies, and so you were talking about learning the rules of how to apply the intention from the government is actually quite tricky because the rules are not all written down. So if you're someone that's doing your job, maybe just starting out trying to learn how to apply these rules, it's not easy to learn, is it?
Yeah, it's challenging. I guess in terms of the R&D tax, it's like half of it is sort of software, or well, I should say technology based, and half
So
of it is like
understanding the
tax
technology that
accounting.
you're having to work with.
Yeah, and I guess the technology side. I mean, they do have rules. Obviously, there is legislation and its own sort of part of the tax legislation. But there are rules around it. But then obviously applying those to new technologies and the way that the R&D scheme is designed, it's not designed just for one industry. It's not just designed for the software development industry. It's designed for all industries. So theoretically, any company in Australia can claim for it.
It's not just for
Um,
startups, though, either. It's for any company. Is that right?
Yep. So the biggest claimant was Atlassian, and they managed to, I think, max it out in terms of what you can claim. But you've got those other big companies in Australia, including like Cochlear and CSL and all of those medical side, and obviously manufacturing, engineering, bioscience, and all those different other sort of fields are also claiming R&D tax too. So it's not just designed for one industry, and that means that because it's not designed for any one specific industry, it's the rules are quite general, and there's I guess you have to be able to apply them to different circumstances in terms of
And
different companies and industries. Yeah.
how have you seen things evolving, particularly for software? Because it's my impression, I don't know whether it's right, you might correct me, that software hasn't always been seen as that innovative and accessible for a lot of different programs. It's starting to become, I think, more acceptable. People love deep tech. We like to solve really, really hard technical problems, and of course, software often isn't that. So how have you sort of seen the role of software in this sort of innovation and the support from government evolve over the years?
Yeah, well, I guess in terms of the R&D tax incentive, it sort of ebbs and flows. I guess when the original program came out, I guess there were some questions about how software fits into it, because it's coming from a scientific basis in terms of the program legislation. How do you fit, software into the scientific method of having a hypothesis and doing experiments and that's the thing. So yeah, so I guess like whenever sort of like a new iteration of the program comes out, there's like a number of years of basically everyone trying to find their feet and trying to work out, both the regulator and also people like us, working out what fits and how does it fit, and that's the thing. And then basically, I mean, pretty quickly, I think software companies became a fairly substantial part of the R&D scheme. I mean, now it's probably about 40% of companies claiming would be software development, or
Yeah,
at
right.
least software development sort of type of projects. Um, and I guess there's been more guidance recently in terms of like particular parts of software development and how they can fit. But there are, I guess, back in the day, there were times where I guess it was a bit more challenging to justify some things, and had to be very careful about how you structure it. But that's still pretty much the same, even
Yeah,
now.
right.
But there is a bit more sort of understanding, I think, perhaps within, especially in the government bodies, about how software development fits into the scheme.
Yeah, great. So I think that's a good lead into the question. So the next question, which is, so software development counts. Can you describe a little bit about the for those who have never really been involved in the scheme? What's the foundation? You talked about the scientific method. Can you sort of just unpack that a little bit? What's the goal of the program, and how do you fit your company's innovation efforts into the intent of the program?
Yeah, so I guess the goal, I guess, of the R&D scheme is to support sort of innovative type companies who are developing new technology. So it's heavily incentivized towards that.
And
So
how
it's
do you
not
define
really,
innovation?
yeah. So it's not really about new business models or new, like, I guess, helping to support your customer. It's really about specific technical innovations. So, for example, like you might be developing some new software, new application or something like that. When we're claiming, we're not really looking at the whole application. We're looking at within the application that you're developing, is there some part of it that is technically innovative? And basically, what we're looking for is like where, I guess, you or another expert in that area wouldn't already know how to build that without having to go through some sort of process of experimental coding, basically. So, so when we're looking for, R&D, we're sort of asking, I'll be asking you about really about the technical challenges that you had in terms of building
Mm.
it to try and find those areas. And what we have to really sort of go through is that process of experimentation that you had to do. Because at the end of the day, the R&D scheme is built on sort of that scientific method where you'd have to have come up with what they call a hypothesis, but really like that's sort of like your technical goals in terms of building that sort of I guess specific technology, and how you're going to go through a process of experimenting, testing, and validating that particular sort of new technology that you're building. So often you'll have like an overall application, but we sort of narrow in on something like some sort of like a new algorithm or some other technical element that you'd be building as part of that. And that's what we call sort of, or what's called in our scheme, the core activities. And basically they're the key technical challenges that you had and that you had to
Right.
experiment to overcome.
So
So
now you're getting into the language that's used, which is really
yeah.
important. I want to come back to that, but I think what you're describing is fundamentally the scheme is about supporting the pursuit of new knowledge. Is that right? So it's about demonstrating that you're pursuing new knowledge that you couldn't know by Googling or going out there and finding existing information. You actually have to have a hypothesis and run an experiment to create new knowledge that doesn't already exist. Is that right?
Yeah, exactly. Like it shouldn't be something that you can, search on a technical forum like Stack Overflow or
Yeah.
GitHub, or find an existing library or code that already does that, and you're just applying that. It's really about sort of like developing something uniquely, I guess, of your own from a technology point of view, and it's not something that when you run it, and when you code it and test it, you already know like it's going to work, or it's going to technically, I guess, meet the goals that you have. So, yeah, it's a very sort of specific thing that we have to look for,
And
and
so that's why you
yeah,
say you take a software application, you need to sort of look at those parts of the application that are involving pursuing new knowledge versus those parts which, if you're building I don't know, a security front end, that that's a well solved problem in most cases for most B2B SaaS apps, for example. So that wouldn't be considered part of the scheme eligibility. But if you're doing something else around algorithms for I don't know, detecting the ripeness of apples or something, using computer vision, just to pick a random thing, that might be considered new knowledge.
yeah, exactly. So yeah, and we would focus in on, I guess, that algorithm that you're writing to as part of that computer vision sort of application. But we can also claim other things. But like to be able to claim it all, you need to have that sort of what we call the core activity, which is that really experimental coding sort of activity that you have. But then we can also claim other things which are called supporting activities, which is sort of like other software development or activities or things that you guys spend time on or work on that are basically that we can relate to that core activity. So, yeah, we don't just claim sort of the actual experimental part, we also claim other parts, but in order to qualify in the first place, you need to have that sort of technical innovation experimentation process.
Yeah, got it. So just a question that's come in on the chat. Are there examples of documents you need to present that demonstrate the hypothesis when applying for this incentive? What about audit requirements? Do you need to keep logbooks of your work? I mean, that's a great question, right?
Yeah, that's a very specific question. So, in terms of the hypothesis, and this for everyone, I guess, to understand what that is, that's kind of like, I guess, when you're going to do an experiment, you'd have to have some sort of, I guess, documentation in terms of like goals. The R&D scheme is not just about what you're building; it's really about the process, like how you're doing your R&D. And what they're looking for is basically that you are documenting kind of the process of doing experiments. And typically you'd start out with, researching, looking for existing technology out there. So you kind of need to document that process, like take screenshots and copies of what you looked at. And then you need to kind of document, the planning of the core activity. So like describing your goals and how you're planning to do your experiments. So you need to kind of document that. So often, as a software company, you might just start getting into experimenting. You may not, write out how what you're planning to do, how you're planning to test and validate, for example, the code that you're writing. So the R&D scheme sort of requires you sort of just do a bit more documentation in that area in terms of expressing what you're planning to do in terms of doing your coding, what your technical goals are, and how you're planning to like test and validate those goals.
Yeah, great. And my experience is that when you're using the scheme, it's typically a multi-year process where very few companies, I assume, would do an experiment just in 1 year. It's often going over multiple years.
Yeah.
And the way that the department manages the claims is often by auditing a sample, right? So you may be able to get things through in 1 year that don't get scrutinized, but you may then get in a future year, you may get audited. And if you don't have the documentation to substantiate your claims, you put yourself at risk, don't you?
Yeah, it's a tax-based scheme, so similar to when you're doing your own tax return. You write all your numbers in. You put hand on your heart. This is my income. This is my expenses, and you lodge it with to the ATO. The R&D scheme is kind of similar in that it's a self-assessment scheme. So you have to self-assess whether you're eligible in terms of the activities, in terms of the expenses that you're claiming, and you do a lodgement. The R&D scheme is a lot more highly audited than your personal income tax or even company tax. It's because of and we'll probably get to this, but because of the refundable component that's available, it's a more highly audited area. And so because it's very beneficial for a lot of companies, it's also an area that they need to audit a lot. So it is a scheme where they would come back in the future to do an audit. So in most cases when you lodge it, as long as you filled in the boxes correctly, that they will register your claim, and then you can lodge your tax return. Unless you're sort of raising any major red flags, then it generally goes through. So it is a process where you need to know like that you're doing things right at the time, because there's no one stopping you and checking you off and saying you're actually eligible right now, or you're doing things correctly right now. They come back 1 year, 2 year, 3 years, 4 years down the track, and then they're going to look back at what you did. And and this is where sometimes things go wrong, is that you might not have been doing the right thing for a number of years before it's detected. So which causes a lot
Yeah,
of
that's a
problems. So
big risk, right? Yeah.
yeah,
And that's
unfortunately.
certainly a position that we found ourselves in as a company. And I think, and I was saying to you before the show, at the time when we started down this path, there was a lot of scrutiny because some large companies had done the wrong thing. They were really taking advantage of the scheme, and I saw a lot of advisors out there which were really skirting the intent and the rules behind the scheme to sort of come up with that experiment and that hypothesis after the work had already been done, and trying to justify a claim after the work had already been done. And that just didn't sit right with us. So we decided to do it ourselves, and we found ourselves in exactly this situation where we got through for a number of years, but then we got audited. And thankfully, we really tried to do the right thing, and we did do the right thing, but we did get tripped up and we got into trouble because we didn't use the right kind of language. And I think this is something else that, this was an expensive learning for us, which I'd love you to talk to about. The rules of the scheme are not clear, are they? And you were talking a little bit before the show about how difficult it must be for the department to actually write the rules for a scheme that's you got to be applicable to all companies and all technologies. Can you just talk a little bit about that and some of the challenges if you were ever attempting to do this by yourself, why that might be a bad idea?
Yeah, it's challenging because it's a fairly complicated area of the tax law. Like, it's not something that, say, even a normal tax accountant would really understand. Like, they will understand the accounting side, but they won't understand the very specific rules and regulations they have around what's eligible in terms of R&D projects. And those rules have been written for, they had to write the R&D scheme for all industries, to be able to, cater for bioscience. They have to be able to cater for manufacturing and also, I guess, software development. So and the rules weren't written specifically for any industry. So that means, in terms of interpreting how it works, there's quite a few number of sort of gates that you have to get through in terms of eligibility. It's not just like one thing qualifies you, in terms of your R&D project. It's like something like 6 things that you need to have. And if you fail on any one of those things, then they can use that as a reason to basically knock out your claim or your activities that are in the claim. So that's why it's challenging, because you have to qualify for all of those things. So when we go through the process, we check for all of those things, that you qualify, and you need to obviously also be able to substantiate those things as well in terms of record keeping, that sort of thing.
Yeah, right.
And then, yeah.
So you mentioned a couple of things there that sort of, if you're choosing someone to help you with your R&D tax claim, they need to have the accounting background so they understand the numbers side. They need to have that technical background so they can actually ask the right kind of questions and understand and work with your technical team.
Yeah.
But the third thing you were mentioning is just the experience of having worked with the scheme for long enough to see enough audits to see what's getting through and what's not getting through. I think that's one of the hardest things to get, isn't it? It's relatively easy to get, relatively easy. I say with a smile on my face, get your accounting experience and get the technical experience. But unless you're working on these kind of claims all day, every day, you're not going to get the practical lived experience to see how the system is being applied. And that's what I think is the biggest unknown for a lot of people that are coming into this for the first time, is seeing that that's a real thing that you need to look for when you're choosing your advisor.
Yeah, because I guess in terms of the guidance material that they put out, like, it's kind of like the tip of the iceberg in terms of what the information is that's available to apply. A lot of the information that we gather is from basically from going through audits, going through reviews, learning, I guess, what they're looking for, how they're looking to see it. And also, I guess, discussions with the regulators as well, which, yeah. So a lot of, like, our information is kind of built up over the years. And as I said, like, it's difficult, I guess, for the regulators to actually really produce all that information, and put it on their website. Like, it's actually, I don't envy their job in terms of applying this R&D scheme. And the other thing, I guess, is there is variability in terms of, when the auditors who they employ, they can come from all sorts of different backgrounds, and have different knowledge of different industries and technologies, and so, making it so that they can understand what you're doing, and that it qualifies, can be part of the challenge as well. So it's not just about the rules; it's sometimes about making it understandable for the regulators.
Yeah, 100%. And I think this is a problem that I see across a lot of disciplines in startup, whether it's marketing, whether it's software development, commercialization, pricing, whatever, is actually defining what expertise is relevant to you as a startup founder. And when we think about expertise, it's easy if you meet someone in the medical profession or the law profession. There's a professional hierarchy. Like if you meet a judge, you generally know the level of competence that individual has because of their title and where they sit in the legal profession. And you don't just get to be a judge. But in the case of the kind of work that you do, it's relatively easy to kind of hang your shingle out and go, I'm an expert in inverted commas in R&D tax, because there isn't that sort of professional hierarchy that is enjoyed by some of those other professions. And this is true for a lot of things that startup founders need to draw on. And I found it really helpful to describe to founders what is an expert. And there's a really good book on this by David C. Baker, rather, called The Business of Expertise, that talks about an expert as being someone that sees many similar use cases in the same, whatever you're an expert in, you're seeing many similar use cases. So in your case, you're seeing many types of software claims for the R&D tax incentive. And it's that data that you see that a non-expert doesn't see that allows you to spot patterns, to diagnose things better than the layperson, and to offer the right kind of solutions better than the layperson. I think that's super relevant to help founders when you're choosing your R&D tax advisor. You want someone that's been around for a while, and you guys have been around for what, 12, 13 years or something like that now, haven't you?
Yeah, that's right. Yeah, I mean there are some regulations around what we do. I mean, you do need to have a tax license. There's also a specialist tax license in terms of research and development tax as well. So,
So look for
you
that.
know,
Founders can look for that.
yeah, that has to be a minimum requirement. If they don't have that, then they're not following the law straight away. So it's yeah, I'd be very careful about anyone saying that they can assist with you that is not licensed, first of all.
Yeah,
But
awesome.
then also I would ask about like, how many claims are they doing? Have they had some recent audit or review experience? And how that sort of went. And I think it's good to ask about I guess their experience in terms of how much they're doing. Yeah, and generally I'd be wary of people who do tax in general, but
Mm,
don't specialize in R&D, because it's quite a different sort of um, competency that you need. Like,
yeah,
yeah, if you were just doing tax returns all day and then suddenly you have to do an R&D claim, it's like going from riding a bike to like swimming. It's a totally different discipline.
yeah,
Half of it is probably manageable, but the other half, in terms of working out what's eligible in terms of new technologies and whether you're fitting into the scientific method or not, that's sort of the part that they would have a great difficulty with.
yeah, 100%. And to take that even further, you guys work specifically with startups, and I think that's pretty important. Because if you're seeing a lot of use cases that some are established businesses, like you mentioned, Atlassian and CSL and other kinds of companies, but you guys really specialize in the startup end of the spectrum, don't you? So you see a lot of use cases for very early stage companies that, and I think, as you said, in some cases, you're one of the first professional services that comes in to support a founder.
Yeah, and I guess that's probably an important thing to say, is that in terms of the R&D scheme, it's really beneficial for the startups, because what they're offering is a 43.5% refundable tax credit. And so that basically means that, if you spend, say, like, $200,000 on R&D, then you could be getting like an $87,000 tax refund, which is, comes back to your company as sort of cash in the bank, so to speak.
Mm,
And because of that, like, it's actually very popular with early stage companies, with startups in particular. So a lot of our clients, start out as startups, or even bootstrapping startups, where generally you're spending most of your time and money on development. Um, and so, yeah, we are often sort of one of the first, I guess, consultants, or recently paid outsiders, I guess, to come into the company and assist you with a particular thing, because yeah, because it's just that stage of the company. So we're often there quite early. I can say, I've worked with very successful companies who've listed on the stock exchange, etc. And we were in the room when there was just a few guys, basically, and in a very small office space, and yeah, and they just had big dreams and starting out. So yeah, yeah, we get to see sort of the full journey generally, in
That's
terms of
awesome.
from start to growth and building up to possibly a big business.
So that's a great lead into, and we've kind of skirted around this issue. Can you talk specifically and directly to why should really founders care? Like if I'm a new founder, like maybe I'm just about to start, or I've already started, I'm not fully aware of the R&D tax incentive scheme. Why should I care about it?
Yeah, because it's really it is the most popular and accessible program from in terms of government assistance for
So it's
startups.
it's not competitive entry, is it?
No, that's right. So you'll see like some other grants are better advertised. You'll see a lot of
Mm,
grants out there. Like there's a search engine where you can search about, I think it's about 700 grants that are available in terms of government grants in Australia. But most of them are competitive. Most of them have very limited funding, like a few $1 million, $50 million, something like that. The next biggest one might be, 300-400 million dollars, which, sounds like a lot of money, but once you split it over many companies, it's sort of, it means either companies are missing out or, they're getting limited amounts of funds. With the
mm.
R&D tax incentive scheme, it's about a $3 to $4 billion a year program, and that's going to, over 10,000 companies. So it's basically it's accessible. So as long as you meet the criteria, you get the benefit. There's no like you have to fight against another company or you fight against anyone else to get the benefit.
Yeah, that's great.
And so there's as long as you're doing the right thing, there's some surety around getting the benefit, which is not the case for a lot of grants programs.
Yeah,
So that's why it's so popular, is because of that accessibility, and also the benefit is the way they designed it is to assist early stage companies in particular by having that refundable component, because
mm,
normally when you're spending money, that's going to sit there as like tax losses in the future that you can use, way down the track. But the way that the R&D scheme was designed was that when you're spending money doing R&D, they're going to actually give you that refundable component, straight away. So it can almost fund almost half of your development costs.
yeah, well,
So like 43.5%. So and that money then can be put back into doing more R&D,
mm.
which kind of has like compounding effects. So if you're taking that money, putting it back into doing more R&D development, then basically, it can actually really help to fund. So it really allows like the funds that you do have available to actually stretch them, like stretch them a lot further than what you might otherwise be able to do. And
And
whether that's, your self-funding or you've got other outside funding, then it allows that. Yeah.
that's a great point. It doesn't matter whether you're bootstrapping or whether you're investment funded, you still are eligible for the scheme.
Yeah. The minimum is like $20,000 or something like that.
Yep.
I mean, I guess typically a small claim that we might work with might be, spending $50,000 a year, something like that. Like
Yep.
that's like the small
Small end of the
scale.
spectrum. Yeah.
But like, and then obviously the maximum is like $100 million. So there's only
Yeah.
one company sort of like hitting that. But yeah, it's obviously we don't work with them. But
Yeah.
yeah, I mean, there's no then sort of upper limit, except for get crazy big. But
Yeah.
yeah, so as long as you're basically meeting the requirements, as long as you have an eligible company, you have eligible R&D projects, and you have eligible expenditure, then you can keep claiming year after year after year. So it's not a one-time thing as well.
Mm.
And that's where, each year we claim, it's like one financial year at a time. And then you can, come back the next year and the year after that and the year after that. And, we've had clients who've been doing the R&D scheme like, 15, 16 years, something like that. So it's not
Yeah.
like
Right.
it's a
So,
one-time thing as well.
so
Yeah.
projects can span multiple years, and you can start new projects every year. Is that
Yep.
right?
Yeah, because funnily enough, R&D projects and new technologies are not magically solved, developed and solved on the 30th of June each year. They don't, all those technical challenges don't just, resolve themselves at the end of financial year. They do, yeah, they do continue on
Yeah. Whatever.
sometimes. So yeah, so activities, projects can span multiple years. Obviously, if you're doing something for a very long time, you have to justify that. But each year we do have to update basically and write about in particular, like what were you doing that for that financial year. So it's kind of like each claim is like a financial year snapshot in time. It's not that you can just sort of write a project and put it in the same every year, because that'll get you in trouble for sure.
Yeah.
Yeah, you do need to sort of justify each year why you're still eligible, yeah, for
Yeah.
that project.
And the funds become available as you lodge your tax return, isn't it? This is a scheme that's sort of paired. It's not the same as your tax return, but it's paired with your tax return, isn't it? Is that right?
Yeah, and I guess that's what some people struggle with the R&D scheme, because it's not an upfront, cash. You don't get sort of like an upfront grant that you can then use to go and spend the money. You have to spend the money first,
Mm.
through your company, and then you can apply for the R&D tax incentive. It's a two-step process. So the first step is registering your R&D, which is through the Department of Industry, Science and Research, or formerly Oz Industry. So that's one government department you have to register your R&D with. They have like an online system for that.
Yeah.
And that's sort of like saying what your R&D is, what your activities are, detailing all the elements of eligibility. And then the second part is it's a tax schedule that goes into your company tax return. So it's like a special section of your company tax return that. So once you register your R&D with the Oz industry, you then, after that, you can lodge your tax schedule once the registration comes through. So, and then that goes with your company tax return, and then basically you get your benefit through the normal company tax return process. So, yeah, so it usually
Yeah.
happens obviously after the end of financial year.
Yeah.
So yeah, you do your R&D for a financial year, and then you can start the lodgement process after
Get
the
your
end of the
benefit. Yeah.
year.
So it's not necessarily going to help you with cash flow issues. If you're a founder out there with cash flow issues, it's not necessarily going to help you with that, but it will, as you say, it will help you stretch your budget a lot further.
Yeah, I mean there are some financial lenders out there who might lend against a R&D expected R&D tax incentive.
Mhm.
Obviously, they will charge a fair amount of
Premium,
interest,
yeah.
but yeah, there are, because yeah, there was talk of trying to incorporate some sort of, like a quarterly payment or something like that into the scheme, but
Mm.
it never made it through the legislation. So there are sort of, I guess, financial institutions that have tried to breach that gap, I guess, by doing more of a debt-based
Yeah.
lending. So yeah.
Yeah, really good. So, in terms of the stage of a company, like how early should people start to? Oops. How early should a startup should can pre-revenue startups claim? Do you have to be earning revenue? What's the deal there?
Yeah, well, the R&D scheme is most beneficial when you are pre-revenue, so before you actually earn income. So once you earn income, if you're profitable, then the R&D scheme is more like a tax reduction system.
Mm.
It will reduce the tax that you have to pay, so you can keep money in the business. But as pre-revenue, it's actually more of like you're going to get cash refunds. So it's more actually like kind of like a capital injection sort of thing.
Yeah.
It's like, you're going to get money into the company to help you grow. So, I mean, typically when you want to look at it is when you are planning to start spending money on technology development, I guess.
Mm.
Um, there's a lot of, like, I guess, key basic things that you have to do to qualify. Like in terms of, you have to set up a company, you have to spend your money through the company bank account. It sounds like basic stuff, but you'll
Mm.
be surprised the number of cases where people come to us and, they're like, oh, we've been spending money on R&D. And it's like, well, what company have you got? We haven't set one up yet. So we
Yeah.
can't claim anything before you set up your company, before you have a bank account, that you're spending the money through, and you're actually doing the lodgement properly. I mean, sorry, doing your sort of
Yeah. That's a
accounting
really
for that
important point.
properly. So we can't claim what's not in your tax return at the end of the day, in your company tax return. So yeah, we usually advise you to come talk to us, like even when you're at that sort of setting up stage, but I guess if you're still
Yeah.
like,
So before you start spending, make sure you're set up properly. That's
yeah,
the takeaway
I mean,
here,
if you're
right?
still in that ideation stage or you're still working out what you want to do, then maybe that's a bit too early. But so when you are, okay, we're going to start paying funds into this and spending the money, that's definitely the
Yeah.
time to start looking at it and setting it up. Even if it's, even if you're a solo founder or just like, a few founders working together, then, it's worth, looking at it, even though, it's very early stages, as I said, like the minimum expenditures, like 20,000, probably like a worthwhile claim is more like 40, 50,000 to start with.
Yeah.
And so once you get to that sort of level, like that's, fairly easy to spend that money on software development these days. But yeah,
Yeah, for
once
sure.
once you get to that sort of level, then that's when you want to have a look at it, because yeah, it's worth it. And even if maybe the first year the claim is not huge, it can still be like a learning process in terms of getting everything in order. So if you're expecting, to expend more
Mm.
money in the future years, even a smaller claim to start with can be, helpful to sort of kick things off and get things in order.
Yeah, that's a good tip. And in terms of the eligibility, it's really on the technology side. So if you're doing user research or market research, that's not eligible,
No,
is it?
no. So yeah, basically, you know, uh, while it's super important for your business in terms of getting that product
Mm.
market fit and understanding what the customer wants and I mean, obviously very important for your business. When it comes to what we do in R&D, it pretty much doesn't matter. Like there's no we're not able to claim on consumer interest or whether someone's going to like it or not, or is it something for a new market. It's really more technology based, so it's really, and there's no requirements in terms of showing that it's going to have any commercial outcomes, whether it's going to be successful commercially. So like,
Mm.
I guess if you show us the typical sort of business slide deck, like how we're going to you know um, do really well in the market and that's the thing that sort of doesn't have any
That's
relevancy really to
not really of
the
interest.
R&D scheme. So as I said, it's super important for your business. So
Yeah.
don't neglect that. But yeah, in terms of R&D scheme, it's very much technology based. It's very much development of new technologies, and so it's more of a software engineering, engineering science based sort of approach that we need to see. So yeah, because a lot of, I guess, people might get confused that, hey, we're building a new product. This product hasn't been
Mm.
released to the market, but sometimes new products don't actually involve developing new technology. So obviously, generally, a lot of the time it does, but it's not always the case. So it's not
Yeah.
just about sort of the product, but also the technologies that sort of underneath it, that really matters.
Yeah, for sure, for sure. So that leads into the next question, which is, what do founders need to prepare? And maybe another way to state this question is, if I'm coming to you as a potential client, how can I be a really good customer for you to make your job as easy as possible to work with me as a founder?
Oh, that's a good question. It's hard, sometimes hard to answer, but I guess the main thing is, I guess, you. I think the main thing is, I guess, in terms of being helpful, because we can help provide the information of what you need to do, but a lot of it, I guess, is about uh, the R&D scheme needs like a certain level of discipline in terms of uh, being able to, I guess, approach things with a level of uh, you know sort of like a higher level of
Documentation and rigor.
yeah, things like documentation, that sort of thing. So you need to have a bit more rigor in terms of doing things properly, because obviously as a startup you're not often thinking about company structure, accounting, legal,
Time sheets.
yeah, all those things are kind of like, you're more like build the technology, and then second might be like marketing and thinking about your customer as well. So some of those other things can fall down the list. But with the R&D scheme, it's not something you can really just sort of half-ass, I guess. It's something you have to it does require a bit of rigor, and it's not like, I mean, it's not super onerous. It's more like the sort of things that as a bigger company, more mature company might do anyway. But as a startup, sometimes that's the things to manage. And so, you need to have a reasonable level of, for example, like accounting, like doing things, properly. You need to try and find a good accountant, for example, or have a good accountant, because you can't really just sort of like have books that are all over the place. It needs to be like a reasonable level, and you need to be prepared to just do a little bit more in terms of record keeping than you otherwise might do. So it's that's sort of probably the main thing, is just that it just things need to be done properly, because it is a more highly audited area. Like if you weren't claiming R&D, then you probably would get away with those kind of things. You'd probably be able to manage without doing everything at a high level, especially early on. But if you're
Yeah.
claiming R&D, then it's one of these things where having sort of a bit more rigor in those areas is important, because you're more likely to get an audit or review that might need, I guess, that sort of assistance. So.
Yeah. So you need that documentation of spend. So if you're using external people, make sure that those invoices are clear in terms of what they're for, so that they can be accounted for properly.
Yeah.
And if you're using internal people, you've got to be time tracking the amount of time that people are spending on these research projects, so you can claim a proportion of their time, don't you?
Yeah. So you need to have some sort of a way of tracking your. I mean, there's a few different things, like even like IP. You need to have agreements in place. For example, if you're working with other companies, or maybe even your staff, you need to have like things to show that your company is the one who's developing the IP. So like having legal agreements. So that's sort of like the legal side, and then there's the accounting side. You need to
Yeah.
track your expenses properly, and then I guess in terms of the R&D side. Yeah, like you need to keep track of the projects and some of the particulars of your project. So, tracking things like research that you did, and like the different experiments that you did, and the testing results and that sort of thing, like keeping documentation on those. And then there's the basically the expenditure side, where you need to keep, I guess, track of records of like invoices and that sort of thing, which are usually more straightforward. But there is some, like sometimes you might need to have like a timesheet or some sort of time basis to track different employees or contractors, I guess, in terms of the time that they spent doing the R&D work versus other work. So yeah, there is some sort of extra level of record keeping. You know, I mean, we try not to insist that it's too onerous, I guess, but that
Yeah.
I guess that's one of the sort of, I guess, challenges that some companies have in terms of applying for the R&D scheme, is keeping that level of record keeping.
Yeah, for sure. So yeah, I think the tip is to maybe have a conversation with someone like yourself early on, put some very basic systems in place, so that you don't find yourself in the position where you could claim a lot, but you then got a lot of work to do to pull all the records together to be able to make that claim happen, because that's where the pain comes in.
Yeah, and often these kind of practices are actually helpful for as you grow, because if you
Yeah.
do it right early on, then later on you have less trouble, like in terms of doing things well accounting wise, doing things well record keeping wise, and it's not just in claiming R&D, but in general for the company, for the business, because you'll find that, and we see this a lot, like when the company's in that really fast growth period. I mean, we have clients who obviously have all sorts of different trajectories of growth. But the one where it's the most challenging can be when they're growing really fast. It's often the growth, and maybe they spend their more effort on the technology side. Often is jumping ahead of the structure and the administration of the company as such. So
Yeah.
that's where
It's such a good point. It's such a good point. I mean, just having the discipline to build hypotheses around your technology development product roadmap, that's super valuable, whether you're using the R&D tax scheme or not.
yeah.
So yeah, I really agree with that. And we've got a question here about how do you think about patents? How do they fall into the system?
Yeah, so the R&D scheme's not about patenting, and we can't claim the costs of filing patents. Sometimes if you are doing patent searches, we can claim some of the costs of that, like doing research into existing technologies. but the patents have no bearing on the eligibility. So yeah, so sometimes our clients might send us their patent document, and I go, yeah, that's nice, but that's usually written by a lawyer or something like that. It's not really
Yeah.
it's not really the same sort of frame that we have to document your R&D. So it is a bit different. Like patents are really about like showing that what you're doing is innovative, which is like one of the aspects of the R&D scheme. But there's a whole bunch of other aspects which are not sort of documented in a patent.
Yeah. Yeah. Really good. Really good. All right. So we're coming to near the end, but I've got a couple of questions that we can rip through that came in before the show. I think we've kind of touched on some of this stuff, but just to provide a clear answer to this one, can I try and claim everything I do? Where's the line between eligible R&D and general product development?
Yeah.
Or business activity from Maddie in Adelaide?
Yeah, so everything that I do really depends on like the stage of where your company is at, and it's sort of like, I guess the answer is generally no, but it depends. It's always like one of these, it's a depends answer. So um
Mm.
yeah, like some of our clients, they're very early stage, like they are not looking at marketing or any other activities. All they're doing is spending time on R&D. And so obviously maybe you're claiming almost, most of what they're doing. But once you're more, once you've got customers, and you have to service those customers, you're doing marketing, you're doing other activities. Obviously we can't claim, like doing marketing and serving customers, doing administration, like company administration. Those things are out pretty much. Then the line,
And
yeah,
you mentioned earlier.
yep.
Sorry, you mentioned earlier anything that's product development, which is kind of an already solved problem for which there's a framework for the other companies are doing, like getting in your logging into your software, and metrics, and getting in your security system. All of those things are well solved problems that we understand. So they're the things that are not eligible. You've got to focus on things that's new research. Is that right?
Well, it depends, because we have the supporting activities as well that we can claim. Sometimes some of those elements can be brought into as supporting activities, but we have to justify how it relates to an eligible core activity, which is the experimental coding sort of new technology
Right.
development part that you're doing. So we have to find those. We have to find those like instances of technical innovation and experimentation that you had to do. And then from there, we can relate the supporting activities, which might be, like doing basic research, testing, basic testing. You might even include like designing interfaces, for example, for users to be able to test or not for users, but for I guess users to test as part of the experiment, for example. So like sometimes we can bring in those other parts, and often, the supporting activities costs are actually greater than the core activity cost. It's not uncommon. So it's not just about, like, we do need to have that element of that technical innovation, but what we can claim is not just that. We can also claim other activities that help to support doing the core R&D activity. So
bottom line is probably speak to an expert. What sort of time do you need to sort of unpack some of this with companies? Is this a week's activity? Is it days? Is it hours? How long would you like let's start with a small claim, maybe for a $50,000 claim. How much time would you spend with the founder trying to unpack how to think about what they're doing?
Yeah, it's variable, I guess. But typically what we do is we do more of an interview type process with founders and technical staff members. So, I mean, there's an initial process of checking out, eligibility of entities, instructions, and that sort of thing. So that's kind of like the first stop. And then the second stop is then going through and documenting the R&D activities and projects. And that's where we would spend time, I guess, interviewing and basically, drilling down to exactly what we need in terms of, finding what we need in terms of eligibility for the core and supporting activities. So that's sort of, I mean, that process can take, a couple of hours of interviewing. Depends. Sometimes for some of our clients, it would be quite a few hours over many days, because there's just a lot of activities, like for a larger company. But for a smaller company, startup company, it could be a couple of hours of talking through but it depends how many activities. So it's really variable.
but it depends. Yeah. But that's a good range to give us a bit of an idea. Last question, just quickly. What are some of the most common mistakes you see companies making when applying?
Yeah. So I guess the first one is not having a company set up properly. Like some people claiming out the wrong company, for example, or they might have like a trust structure, for example, that doesn't meet the requirements of R&D. They might be running their business out of a trust, which you can't claim. So
Right.
that's, I guess, the first thing is having everything right in terms of the entity to claim. The other one is, I guess, claiming the wrong activities. Commonly, people try to claim whole projects where they don't meet all the eligibility requirements, and the trouble is that like once you structure yourself in the wrong way, then that sort of sets you up for failure in terms of the activity. So if you try to claim on a whole project, then you'll have trouble justifying it because you haven't sort of properly drilled down to actually what the eligible activities are. Yeah, and then I guess there's sort of the common ones, and then obviously claiming the wrong expenses or not properly having record keeping or documentation, I guess, to justify it. But unfortunately, there are a bunch of other rules as well that you have to. There's sort of like cases that happen, 1% of the time or 5% of the time. But
Yeah.
typically every company might have one of those as well, where it's just like they're in the wrong sector, or there's some sort of exclusionary clauses that might catch you out, or there's like in terms of the company structure and setup, like there's some issues with that. So there are like also a bunch of small things that can kind of catch you out as well. But the major ones are probably more like the company structure and actually sort of properly documenting what your R&D is.
Awesome. Well, that's a great place to finish the show, and perhaps let people know how they can get in touch with you. Andrew, it's been an absolute pleasure to chat to you today. You've clearly got a wealth of experience in this space, and I think for any founder that's sort of considering taking advantage of the scheme, and they absolutely should, you and David at Innercode are someone that is definitely worth speaking to. So there's your contact details. There's an email address there, and there's a website there. They can jump on. What's the typical first engagement that you have with a client? If someone actually mails you, what's the general process they're going to expect?
So there'll be my colleague David would reach out and basically, I guess he'll want to, I guess, have a chat with you to talk through, I guess, your company and your details, and then sort of the first part would be sort of looking at the company structure and make sure that's all right. And then after that, the next step is talking to me, I guess, talking about your R&D or one of my colleagues about the R&D, and basically, going through that sort of R&D documentation process. And then third step is really sort of gathering the expense information. So that's usually more like some phone calls and emailing back and forth. So that's sort of, I guess, the rough process. So first step would be talking to
Awesome.
David.
That's great. That's great. Thanks so much, Andrew. And of course, if there's founders out there that are looking for more clarity around the startup journey more holistically, of which the R&D Tax Incentive is just part of, and I know for founders, this is the most difficult issue for being a founder. I speak to dozens of founders every week and have done for more than a decade now. And the number one challenge founders have is just the clarity of the journey, because putting together the jigsaw puzzle of what is the journey look like is something that founders are still grappling with today. Even if you go through accelerator programs, talking to investors, going to community meetup groups, most founders tell me they still don't have absolute clarity on the journey ahead of them. And so if you're looking for that clarity, at LeapSheep, we have something called a Startup Builder Strategy Session. It's $480. There's a money-back guarantee. If it's not the best $480 you've spent getting the clarity you need for how to get to product market fit, we'll just give you your money back. If you want to book that session, that top QR code there will allow you to do that. If you don't feel you're ready for that and just want to have a chat, I speak to a dozen or so founders every week just to see what's working and what's not working out there in the startup world. So I'd love to chat to you on that. But that bottom link there is available for you. Next show, we have a fabulous guest on, Peter Petroulis from WizButler. This is a story that you're not going to want to miss. Peter has an AI platform that's completely reimagining how restaurants are run from bookings to the back end ops. Peter didn't just build the software, he invented a whole new system, secured patents, and is now helping venues boost profits and cut complexity. If you're thinking about how to turn deep industry insight into something scalable, or how to take on an old school systems with smarter tools, this episode is full of gold. Peter is a former restaurateur turned SaaS and AI software developer, so he's got such a fabulous story. So that's this week's show. Thank you again, Andrew. We're at LeapSheep and we're working flat out to flip the startup success rate and help founders reach product market fit and avoid the startup graveyard. We'll see you next time.
Thanks, Kurt.